Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Thursday, January the 31st, 2008. This is our last broadcast for January. It's hard to believe that we've been doing this for a month now. We've had a very interesting but volatile month, and it looks like we have more to come. Let's start right off with the headlines that came out of Switzerland earlier this morning. They're saying dollar hits new lows after Fed slashes U.S. interest rate. The dollar sank to a 2-month low against a basket of currencies on Wednesday, after the Federal Reserve cut benchmark interest rates by 50 basis points and warned more may be needed to support the faltering U.S. economy. The move comes just 8 days after the U.S. Central Bank unexpectedly cut its lending rates by 75 basis points to boost an economy battered by a deep housing slump and a persistent credit crisis. The cumulative 125 basis point reduction in less than 10 days brings rates to 3%, a percent point below the Eurozone rates and among the lowest in the developed world. The euro-dollar surged to 149.07, not far from its all-time high of around 149.67. before easing back to approximately 148.20. The pound dollar was higher by more than a cent and was last trading down at around 198.38, but has since eased up to about 198.80. The dollar yen fell 79% to 106.23, and the dollar Swissy hit a record low of 108.12. They are saying that the U.S. stocks fell lower after a CNBC reporter said he believed rating agencies may downgrade bond insurers MBIA Incorporated and Ambac Financial Group as early as today. I personally don't believe that one reporter from CNBC has the power to move the markets up and down with one statement. Traders are saying that the market is watching to see whether the euro could build on its own momentum to rise above 150, though some say it might take more tough talk from the European Central Bank on inflation before that happens. Unlike the Feds, the ECB has held interest rates at 4% throughout a credit crisis that began in mid-2007, and policymakers have continued to focus on inflation risk. The Asian session focused mostly on the Fed's cut rates for the second time in 8 days. As we know, the Fed's cut interest rates by another 50 basis points to 3%. This was in a move to combat the risk of a deep and protracted recession. The Feds did intimate that there was still more room for maneuvering. The statement that came with the move said, "Downside risk to growth remains." There is a growing feeling in the market that the Fed could still move rates to 275 in March. The feeling is, however, mitigated by the language the Fed has on inflation, saying that it expects inflation to moderate, but would carefully continue to monitor inflation developments. The dollar nonetheless lost ground after the Fed delivered a cut in U.S. interest rates. The dollar lost 8% against the euro to 148.65, as well as 1% to the pound at 199.10, and receded 5% against the Swissy at 108.85. The European CPI index seemed fairly steady at 3.1%. This figure should give some room to move to the ECB and allow it to cut rates. However, the ECB's position on inflation has not budged, and President Trichet is still very concerned about the price movement. His feelings will, in all, probably remain hawkish with the data that is to be released today. It is expected that the Eurozone unemployment data will underscore that despite the slowdown in economic activity, the labor market has not been dented by that much, even though the EC Economic Sentiment Indicator should underscore a persistent slowdown for January. Data shows December UK mortgage approval sank to the lowest level since 1999, heightening expectations of a step towards easing by the Bank of England when it meets next week. However, the reappointment of Mervyn King as governor lessens the chance that the bank would follow the Fed. The combination of the Eurozone economic confidence and the CPI will likely put the ECB in a tough position. The EC survey declined to 101.7 versus the expected 104.1, showing slowing activity, while the CPI jumped to 3.2% versus 3.1%, highlighting rising price pressures. While in the near term we expect Trichet to keep his hawkish tone, but the eventual slowing of economic activity will become the dominant fear and show the way to lower rates. The Canadian dollar easily passed parity as November GDP month-to-month fell to 1%, fueling the speculation on the slowing economic conditions and giving the cue to lower rates. With the GDP growth falling to 6% in the U.S., we expect Canada's economic growth to follow suit. In the U.S., the initial jobless claims increased to 375,000 versus the 319,000 that was anticipated, which could also indicate that the U.S. is heading into a recession. We are currently getting mixed signals from the U.S. labor markets, which will increase expectations for tomorrow's important payrolls. Overall, the general outlook is that the labor market is losing steam, but so far is not weak enough to advocate a recession. The markets will be very interested in tomorrow's U.S. ISM and NFP, since both will be the first important reading for January. The ISM has been an exceptionally good indicator for short-term activity. That concludes our news broadcast for today and for the month of January. We hope that it has been beneficial in your trading, and we will look forward to seeing you tomorrow for the biggie, which is non-farm payroll. We would like to invite you to come to our website at www.succeedinforex.com. There you can find a link to our Forex forum in Yahoo, which is also Succeed in Forex. You can also find some information about our Traders Training Center there and how you can join us. To give you a little idea of what goes on there, we usually go in about 9 p.m. Eastern Time during the Asian session, review some of the charts, work on any indicators that people might have questions about, and also do some training. Then about 2 a.m., just before Frankfurt opens, we go and do a live real-time chart rundown of the pairs, seeing what might make an interesting trade during the Frankfurt and London sessions. We're usually there until around 4:30 a.m. in the morning when news comes out. Then we'll take a slight break and we come back around 8:30 for the New York Open session. And we are there until the close of London, which is at noon Eastern Time. During all this time, we discuss and have live charts showing and help traders with their questions. So we'd like to have you come check us out, join us, see what we're all about. Again, thank you for viewing, and we will see you tomorrow. Have a great trading day.